Entry relies on technique, exit relies on art. Today we are sharing the DCA double trailing stop strategy, making systematic investing less about blind persistence and more about knowing when to advance or retreat. Welcome to the Inventor Strategy Selection channel. This channel focuses on discovering trading strategies that truly withstand real-world testing in the crypto markets. DCA strategy, or dollar cost averaging, means investing a fixed amount at regular intervals to buy assets. This approach smooths out price fluctuations by spreading purchases across different time points. The traditional DCA concept is trading time for space, but it faces an obvious problem in practice. It only manages buying, not selling. Many investors strictly follow their DCA plans, but miss the best exit opportunities due to greed at bull market peaks, or give up due to fear at bear market bottoms. Have you ever wondered what would happen if your DCA strategy could automatically protect profits during uptrends and scientifically add positions during downtrends? This is the core value of the DCA, plus double trailing stop strategy. This strategy is not a complex combination of technical indicators. Instead, it adds an intelligent exit mechanism to traditional DCA. It keeps the basic advantages of DCA while effectively improving exit timing through a double protection mechanism. The DCA plus double trailing stop strategy is a complete trading system that integrates trend identification, batch position building, and intelligent exits. The strategy core has 3 layers. The entry mechanism uses EMA fast and slow line crossovers to identify trend start points. When the fast line crosses above the slow line, it triggers base order positioning, with a cooldown period to prevent frequent entries. The money management mechanism uses 1 base order and 2 safety orders for batch investment. Safety orders trigger sequentially during price drops based on ATR dynamic spacing or fixed percentages, achieving cost averaging. The risk control mechanism uses triple exit protection. Standard trailing stop provides basic risk protection, profit lock trailing stop activates type protection after reaching profit thresholds, and trend reversal forced closing ensures timely exits when trends change. This multi-layer design upgrades traditional DCA's one-way buying logic into a complete trading cycle that balances offense and defense. The strategy contains 3 core parameter types. Trend identification parameters control entry timing sensitivity. EMA length directly affects signal frequency and accuracy. Shorter parameters improve response speed, but increase false signal risk. Risk control parameters determine stop-loss protection strictness. Standard trailing stop percentage controls basic risk tolerance. Profit lock trigger threshold and trailing percentage determine profit protection activation conditions and protection strength. Money management parameters affect averaging strategy execution. ATR multiplier controls dynamic adjustment of safety order spacing. Order size ratios determine how aggressive the capital allocation is. Each parameter needs adjustment based on trading asset volatility characteristics, personal risk preference, and capital size. The cooldown parameter prevents frequent entries, playing an important risk control role in choppy markets. Parameters interact with each other, requiring overall consideration of their combined impact on strategy performance. The strategy uses 3 core technical indicators: EMA for trend identification, ATR for volatility measurement, and crossover functions for signal confirmation. EMA calculation uses exponential weighting, giving higher weight to recent prices. Compared to simple moving averages, it responds faster to price changes. Fast and slow EMA crossovers are precisely captured through crossover and crossunder functions. These functions return Boolean values, ensuring accurate crossover signal identification. The ATR indicator calculates true range, used for calculating safety order trigger prices. Strategy signal generation includes 3 levels: entry signals, averaging signals, and exit signals. Entry signals are based on EMA crossovers. When the fast line crosses above the slow line, with no current position and not in cooldown, it triggers the base order. This design avoids overly frequent trading in choppy markets by controlling minimum intervals between base entries through the cooldown bars parameter. Safety order signals are then generated when price drops below preset trigger points. The strategy uses open trades variable to ensure sequential safety order execution. SO1 triggers when holding 1 order. SO2 triggers when holding 2 orders, forming a progressive risk control mechanism. Trigger price calculation uses 2 methods. ATR dynamic spacing calculates by subtracting ATR value times multiplier from base price, automatically adjusting spacing based on market volatility. Fixed percentage spacing calculates by multiplying base price by drop percentage, providing more intuitive and stable trigger point settings. Traders can use the ATR spacing parameter to choose the appropriate calculation method based on their trading habits. Order execution uses USD denomination, calculating corresponding quantity through current price. This approach ensures fixed capital amount per order, facilitating money management and risk control. The entire signal generation mechanism creates a complete capital deployment process from exploratory positioning to gradual adding. It maintains DCA strategy's core advantages while adding market adaptability. The core of strategy execution is implementing the double trailing stop mechanism. The system uses strategy position average price to get average entry price as the profit calculation baseline. This price adjusts dynamically as safety orders execute, ensuring accurate cost calculations. The standard trailing stop mechanism continuously tracks the highest price since entry through the highest since entry variable, calculating trail stop price based on the set trail stop percent. When current price drops below the stop price, it triggers the stop hit normal signal. This mechanism works continuously from opening, providing basic risk protection. The profit lock mechanism uses two-stage logic. Stage 1 monitors profit level through lock-in triggered variable. When price reaches average cost plus lock-in threshold, it activates protection mechanism, marking the strategy's shift from risk control mode to profit protection mode. Stage 2 begins tracking new price peaks through lock-in peak variable, updating lock-in stop price based on the tighter lock-in trail percent. When price drops below this price, it triggers stop hit lock-in signal, ensuring more profit protection during market pullbacks. All tracking variables reset to initial values when flat, ensuring next trade starts from clean state, avoiding interference from previous trade data. Exit conditions integrate 3 scenarios through exit condition: standard stop hit normal, profit lock stop hit lock in, and trend reversal trend down. Any satisfied condition triggers close all complete liquidation. This multi-layer protection ensures the strategy can timely stop loss or take profit in different market environments, controlling losses during drops while locking profits during rises. The visualization section plots key strategy elements. Fast and slow EMA lines show trend status. Standard trailing stop line shows basic protection level. Profit lock stop line shows tight protection level after activation. All stop lines only display during position holding, avoiding visual clutter when flat. The strategy shows different adaptive characteristics in various market environments. In clear trend bull markets, EMA crossovers can timely capture upward trends, with double trailing stops ensuring profit protection. Here the strategy's complete logic can fully function. In bear market environments, the safety order mechanism provides some downside resistance through cost averaging, but careful money management is needed to avoid excessive averaging. Choppy markets are the strategy's main challenge. Frequent EMA crossovers may cause multiple small losses. Consider adjusting EMA parameters or adding additional confirmation conditions. Different coin volatility characteristics require corresponding parameter adjustments. High volatility coins need larger ATR multipliers and stop ranges. Low volatility coins can use tighter parameter settings. The strategy's modular design allows targeted optimization. You can optimize entry conditions, adjust capital allocation ratios, or improve stop logic. As an improvement attempt on traditional DCA strategy, this strategy has certain reference value in framework design. Regarding strategy completeness, from entry signals to money management to risk control, each component has corresponding logical support, providing a practical solution template for DCA strategy improvement. Risk management performs well. The double trailing stop design provides layered protection. This approach can be applied to various DCA variants. While current entry conditions are relatively simple, mainly relying on EMA crossovers, this strategy framework leaves ample room for future optimization. It can easily integrate more complex signal confirmation mechanisms such as volume confirmation, multi-timeframe validation, or fundamental screening conditions. For adaptability, ATR dynamic spacing demonstrates one development direction for intelligent DCA. Of course, fixed spacing might be more suitable for specific trading styles in certain situations. Understandability is good. The entire framework logic is clear, providing a good reference template for other developers. Innovation is mainly reflected in improving traditional DCA exit mechanisms, especially the application of double trailing stops, providing new thinking for DCA strategy development. For practicality, the strategy provides a complete path from concept to implementation, proving the feasibility of improved DCA strategies. This strategy's value lies not only in its current performance, but more importantly in providing an extensible framework foundation for further DCA strategy development. I hope this strategy can provide useful inspiration and reference for everyone in DCA strategy improvement and innovation.